Hi everyone, we are back. This is the Safari's revenue series where we talk about the companies that actually make money in crypto. Today, we're really excited to have Flo, who's the head of BD at Ostium. Welcome to the podcast.
Yeah, glad to be here. Thanks for inviting me.
Of course. Well, to start us off, can you tell us a little bit more about yourself? What's your role and what's your
Yeah, don't I hate yapping about myself too much, but my name's Chris. So many people actually might not know that because I go as Flow or Flow Trader TM on Twitter and Telegram and just kind of the CT community as some people call it. So my background actually is in traditional finance in a couple different kind of areas. I actually started in insurance at a local kind of a local firm. And the founders at that firm always had their trading terminals open. So this was a few years ago, probably around 2016, 2017. So back then, if you were a serious trader, you probably had like Thinkorswim open from like TD. I think they're owned by Schwab now. So that exposure kind of like pulled me into trading. I would go kind of like on my lunch breaks or just like, after work and kind of be like, hey, like, what are you guys doing? And they showed me their terminals and kind of got me into it. So I began in biotech. For many people who have traded like a lot of different asset classes, like it's actually really relatable in some ways to crypto. The way they kind of like run kind of like capital formation and kind of the actual way the markets function on like especially in the OTC and the pink sheet markets. So I just kind of like over time realized there's a lot of similarity there. And then during COVID, the 2020 era, kind of when a lot of people I think made the jump, I was just kind of like, I'm at home. I have this money. The most volatile asset class is crypto. So let's kind of like get into it, start trading it. And I just started kind of like trading normal, just like Bitcoin, Ethereum. Some of the back then it was mining stocks, so like Riot, Mara before they kind of became miners, things like that. That's what I was trading is on that level. So very very limited. I wasn't quite in a DeFi until a little bit 2021 into the end of 2021 into 2022, and from there just jumped straight into the crypto market and DeFi, and I've just been kind of like in a sense degenning on chain ever since. And then eventually made my way into kind of just the marketing kind of world, just pretty much just by virtue of growing kind of my own network, my own kind of influence in the space. Really, that's not my background. I like my background was in finance, and then the marketing stuff came, growth stuff came later. To be honest with you.
Yeah, that's awesome. I feel like a lot of people in crypto came in through a different path and then ended up doing growth and marketing because it's so important. And if you're on the non-technical side, even coming from TradFi, that's where people ended up. So super cool that you have the background that you do. Tell us a little bit more about your company. What does the company do, and who would you say is your core customer today?
Definitely. Not to be too buzzwordy, but Ostium essentially is what we're trying to build is the RWA liquidity layer. So for both institutions and consumers, but what that means essentially is just the most liquid on-chain place to trade RWAs or traditional assets. So whether you're, an institution, an MM hedging out your exposure, or you're just kind of like the normal on-chain degen, you want to express a macro view, you've kind of been in the space for a while, you're you're interested in trading other types of assets, and you kind of want to just express a directional view on, maybe not crypto this time, maybe it's gold, maybe it's the S&P, maybe it's oil, something like that. Then, basically we want to be the number one place for you to do that, and for institutions also to come and hedge out those exposures as well. So we're basically trying to serve, there's like multiple customer segments really, but to kind of like simplify it, it's institutions, market makers, delta neutral funds, things like that. And then just kind of the end consumer, the traders who are looking for convexity, they want leverage. Maybe they used to be an options trader, and they got into perps now, and that's kind of like their main vehicle now. So that's kind of like the two main kind of buckets, I would say.
Awesome. And how does Ostia make money today? Do you have a set fee? How does
Mhm.
that look? And has that pricing structure evolved since you guys launched?
Yeah, so like a lot of other dexes, we monetize essentially through fees on trading. So that includes, in most cases, there's, with most dexes, there's like an opening fee and there's a closing fee you pay on both sides of the transaction. Our infrastructure is a little bit different. So we actually only have an opening fee. So that's kind of like, a big portion of the revenue from the protocol is just that upfront kind of like opening fee to express a view base. And then from there, there's also like liquidations, which is a little bit more of a kind of there's peaks and valleys. Sometimes nobody's getting liquidated. The market's going in one direction. It's just kind of like very trending. And then sometimes just, the market shifts. You get a pullback or a pump off the bottom and everybody's just getting liquidated at once. So that's a little bit less of a consistent kind of revenue source. And then I think, I can kind of just say that, the eventual goal is we'd like to actually be, up there among with like the Robin Hoods and other people who are kind of like also kind of potentially parsing out flow so that we can reduce those fees and make it kind of a cheaper, more efficient place for retail traders as well. So, you know, Robinhood kind of like does that kind of and they were the ones who innovated bringing down cost of trading, essentially commissions to zero. So, our goal is kind of in that directionally the same. There's always going to be a premium to kind of to trade on chain to some degree, but we'd like to be able to essentially work with institutions, work with market makers and bring it to where as a retail trader, you're eventually going to have like very, very cheap cost of capital and fees and everything like that, while still obviously maintaining consistently growing revenues. So
Yeah, very cool. Walk us through your first your journey from zero revenue to your first million in revenue. What were some of the either growth channels or early customer segments that you targeted to get you there?
So one thing that we did that's a little bit different as well on this end is crypto is very marketing heavy, meaning it's mostly kind of wide like strokes. You're marketing, you're talking to a big group of people, and then you're kind of expecting inbound. You're spreading a message, and then you expect people to come in and use your product based off of that message that you're spreading. Narrative driven, whatever you want to call it. In traditional markets, in just kind of like Web 2, whatever you want to call it, there's a very sales driven culture, which means instead of going to a large group of people, spreading a message, having them come in, you're kind of directly going to people on a more of a one-to-one basis and kind of like, evangelizing your product, teaching them how it works, maybe doing white glove, like one-on-one onboarding. So that's kind of like one thing that we did differently is just kind of having a sales process as well as kind of a marketing process, which again is rare. You'll find the companies that are generating revenue that have like a decent business. They're doing both of these things really well. So, and then just kind of more broadly, the way we were able to kind of generate that revenue was just focusing a lot on just not just trying to be another perp exchange and just listing all the different altcoins, like all the, micro caps and just like making it essentially where we were a substitute or an alternative to what else was out there. So it's like, oh, I can trade here or I can trade on Ostium, the same things, and basically making yourselves a destination, like a different destination, like where, we're not a substitute, we're something completely different. We have completely different assets. And that was the big growth driver, particularly around like the S&P 500 and the NASDAQ and kind of like the US markets, particularly around like Liberation Day and tariffs and everything. So we timed it. So we do it purposely, but at the same time, we benefited a lot from timing. Just to be honest with you, the Trump presidency, macro volatility is in right now. So, the thesis that we had 3 years ago, is essentially it was a lot of building in order to get to where it's like the thesis is actually playing out. Like a lot more people are jumping on board. And so it was a matter of like, we were able to generate that first revenue kind of just by being very unique. And now it's more people are coming into the space. And that contrast value is actually a positive for us, because if you're the only person kind of being different and doing what you're doing, people don't have a good comparison. So it's like people are comparing us to other dexes that are crypto focused that's already out there and like, well, you can't do exactly what they can do, right? But now more and more people are coming out as like kind of in our segment, like RWA perp dexes. And it's like, actually, if you look at our segment, we're by far kind of the most capital efficient, kind of the most kind of like fastest growing. So it's like the contrast, like all the market validation is actually positive in so many ways. And honestly, that's what led us to the first million. And that's what's going to lead us to the next 10 as well, to be honest.
Yeah, for sure. Yeah, it's interesting that you mentioned that. I feel like there are a lot of companies in crypto that kind of hit their moment a lot later on. Like Virtuals is a great one. Like they
Right.
TGE'd like a year and a half before they had their moment. It was actually a long time before, they like sort of like
Yeah.
came up as a protocol. Versus a lot of people, are in that marketing led, as you're saying, they like everything is about the TG and then like you never hear from them again. So it's
Exactly.
interesting of like the actually building, having something that's real, then like growing with the narrative as it comes for you. I wanted to double click a little bit more into what you were saying about marketing led
Yeah.
versus sales led. How do you think that this looked for Ostium? What does it mean to be sales led within a crypto context? What were you doing differently when it comes to being like sales first?
So it's, it sounds very just kind of, boomer in a sense. Like it sounds like very old school, what we're doing is, but it's essentially just walking people through the funnel of lead generation. So one of the things that we did is just monitoring, like using the radar function on Twitter, for example, looking up just like RWA perps or, you know, um, trading stocks on chain and basically like having like this very good understanding of the conversations that happen around your product, and then essentially finding those people who are interested. They've expressed, oh, if this was on chain, I would trade it. If this was, they've expressed like an open interest. So that's like one major bucket. Another people is just like, people who are enter into our spaces or podcasts and just like, they've sent a message. So it's really just knowing your audience in a sense. That's what's able to kind of unlock that.
And then yeah, go for it. Sorry.
Oh no, and basically just like once you have that funnel, once you have those leads generated, you have a good, I'll be honest with you, in January, February, I did this and I gathered a list of about literally 1,000, Twitter accounts. And these were active traders. These are people who had expressed interest in trading RWAs on chain, trading stocks on chain. And in January, February, this was still very early in the narrative. X stocks hadn't dropped yet, Robinhood perps hadn't dropped yet. So it was very much like people weren't, the ground wasn't set for this conversation yet. It was a matter of I gathered the leads. We went and did cold outreach. We did cold outreach. We had a CRM. We were doing follow-ups, like to set meetings and jump on calls with people. And, we set follow-ups to, kind of continue and cultivate these users because ultimately, especially for an early DEX, you're very whale driven. So your biggest unlock at first is actually, somewhat contrarian for a lot of other businesses. Your unlock initially to grow volumes is not just getting a ton of users. It's actually getting your whales, like getting the people who are driving 80% of the volume to do more volume, right? So it's like
Yep.
that's where it becomes very sales driven, is because you're working directly like one-on-one with whales, with people who are moving lots of capital to be like, hey, like what can we do to have you scale up your volumes, as opposed to just like, again, advertising the product. You come in, you use it. It's like, hey, you're using the product, or we've sold you on the product. You've become a user. Now we're cultivating you to increase your volumes, to use the platform more, to move over positions that you have running on another DEX or another SEX over to us and start running your strategies on Ostium. So it's like this the sales process is really, it's just simply like just the old school method of approaching customers one-on-one, white glove fashion, onboarding them and continuing to just be in contact with them and having them scale their activity on the platform.
Yeah, I think that that's like a huge insight. Not enough people are doing things that way, and it really shows. It, I've done 5 of these interviews so far, and a lot of people have like a similar approach. It really goes back to the basics of like know your customer, reach out to them, talk to
Yep.
them, versus a lot of people are playing this other game that is not knowing their users, not knowing anything. So
You'll
it
notice
definitely
the revenue
resonates a lot what
generating
you're saying.
companies. Yeah, the
Yeah.
revenue generating companies, like you'll hear a lot of, like I said, you'll hear a lot of the same things. Like this is what we did, this is what works. So we doubled down on it and just started like hammering that home, as opposed to just trying to do every other kind of like little thing that everyone else is doing, right? So
Yeah, no, for sure. Was there any like, I would say like non-obvious revenue unlocks that you found, like besides this process, or maybe it was a part of this process that like certain types of messaging really worked for you, or yeah, whatever it might be,
um, I mean,
little
the
tricks you found
messaging
along the
part,
way.
I think that we developed a really recognizable kind of a launch structure. So like we have like these very kind of like branded, like if you see the Ostium like launch videos for when we launch assets, it's like very, very unique. So, just having like something that is like immediately recognizable as you and like building that level of brand is and that level, it builds a level of trust. It's brand trust. So that, I mean, it's kind of a non tangible in a sense. Like it's not directly like linked to the numbers, but really like having just a consistent strategy that works and you continue hammering into that same thing and just not like forget what's working for you and just be like, oh, like we're going to try new things all the time. Like sometimes that's good. You need to go out and try new things. But it's really just a matter of like you found something that works one time. It's in, like, and a lot of people tend to do this, and I'm guilty of this as well. Sometimes is it worked, but then it's like I'm you stop doing it for some reason. Like I couldn't tell you why, the reasoning why it happens, but it's just sometimes you find something, it works pretty well, but you're maybe not quite convinced enough to keep doing it. But in reality, it's like, you need to keep doing it. You need to give it like 2-3 months on top of that to really get some results out of it. And I would say that the other thing would be just a lot of people are afraid to kind of do like operational expenditure on marketing, do incentives. And we, to a degree, are very conservative on that stuff too, right? But when it comes down to it, like, you're looking at the headline numbers. So let's just use a trading contest, for example. You're running a trading contest, you have $20,000 in prizes, right? So most people, it's like you're looking at that as a cost, like, oh, this is going to cost me money to generate volume, right? Or just generate activity. But maybe it's not surprising to other people, but to me, it was actually a little bit surprising, is that the majority of the time, like, you're essentially like, there's a great ROI on that type of activity, like, in fees, in whatever, like liquidations, whatever it might be. I mean, a lot of, especially for an exchange, like, you can find those things that have more of a direct link to volume, and it's like, oh well, this is going to cost $10,000 to run, but like on average, we're generating $20,000 of fees or protocol activity from this. So I think that just the kind of sometimes not so much being afraid of the headline ticket, like how much something costs for you to do and how much it like revenue it's going to generate, like kind of like upfront it's like I said, you asked for non-obvious, maybe this is super obvious, but I just learned that there's a lot of things that you think are going to be expensive to do, and then they end up not being expensive because of that, like what you're getting on the back end, right?
Yeah, no, that totally makes sense. And for these trading contests that you're doing, are they really about like sort of like if you get a certain amount of volume, then you get into one of these like top prize slots, or like what is the model for these trading contests that you found successful?
Really kind of very, very simple. Just incentivizing, primarily the finding things to incentivize is important. Um, we originally kind of, very early on in the protocol, just like, without so honestly too much forethought to it, our original prizes were based off of like dollar P&L. So obviously, very obviously that is going to be led by whales, right? So after that, it's like, we switched to like percent P&L. We had like a way of calculating like the winner. Before it was like based off of, for example, realized gains. Eventually we kind of found out that there's ways to game that, with the like delta neutral trades and like doing certain things. So we had to kind of like transition into like including unrealized P&L as well. So yeah, there's a lot of just like learning process and kind of the things that actually add to volume, bring users. It's a learning process. You're not gonna like, we've done maybe the work for some people, but it's like, it's different for everyone, in that you're not gonna really a lot of time find out what the pain points are, or what, these things are, until you actually experience them. And then you can adjust. And I think that I would say just being able to adjust, especially to your own users' feedback, being very responsive and just being willing to be like, oh, like we did this, the users found an issue with it, we verified that this was an issue, and boom, let's fix it. That's also kind of like very important to finding out what works on for the different incentives levels as well. So
Yeah, no, that's awesome. Definitely makes a lot of sense. In terms of you were mentioning before, some of the other strategies like outbound, was that like a one-time process where you like, had this, you generated this list of 1,000 people, then you went through the flow, you reached out to them, you talked to them, you converted them, or is this like an ongoing methodology that you guys are like have a machine now that's like moving, like leads get generated, you like go down this thing, or is it more like you have a strategy, you deploy it, then you have a new strategy, deploy it? Curious to hear a little bit more about like your growth philosophy and how that's working.
yeah, I mean, it's still fairly kind of like manually done. So, I mean, as far as like how our growth strategies have kind of developed since then, I mean, it's really been a doubling down of what works. So, I'll be honest, like we launched the points program, for example, around April. As we started doing some other stuff, this is where I fell into that trap that I was mentioning, is where we stopped doing a lot of the just one-on-one outbound, cold outreach. And that was the trap, is, we started getting caught up with other things, all these new marketing things, and we did stop doing that for a while. And now we've reevaluated. We're like, wait, like this worked. Like, why wait, let's go back, let's look at the data, let's look at the numbers. This was actually working. What did we get distracted with? Why aren't we continuing to do that now? So it's kind of like, again, the learning process was, we made those mistakes, and then we're like, wait, this actually worked. Let's double down on on what actually works. So I would say we actually had a pretty good idea of what would work very early. And
Hmm.
then just in the process of trying new things, we got caught up with trying new things and forgot for just a little bit, forgot to double down on what worked. So we're back in full swing now. We're doing again whole process from lead generation, cold outreach to user acquisition, cultivation. And that's still kind of like a major aspect of our growth. So I would say that that's the doubling down has been the biggest part. So with that, as opposed to like a newer stuff, but nowadays we have a fairly strong base. Ostium has a good kind of like fundamental base of users, fundamental base of volume. So I mean, I think personally, I've been considering recently going and kind of again doing more experiments again, but without forgetting to double down on the things that work in the process. So
Yeah, no, I think that that's a really great lesson. And when you think like macro about the business, what are the metrics that you track the most closely? Like it sounds like volume is a very like key indicator of like revenue. Are there other metrics that are important to you for how your team tracks things?
I mean, what the North Stars are always recurring users, new users, so just users in general, volumes, of course, for decks. The things that we like to look at as well, just like they give us a good idea of like the health of the business, like our level of capital efficiency and how traders are using the protocol, whether it's like, let's say wash trading or whether it's real activity, is things like volume to OI. So basically, OI to TVL, just kind of looking at these metrics of like, this is the amount of liquidity available, and then how are people using that liquidity? If you see a protocol that has tons and tons of volume, but the ratio to OI is very low, it obviously means, not, it can mean, but not necessarily that there's a lot of wash trading. But what it ultimately kind of just on a broad level means is that people are using it for very short-term moves or not holding any positions overnight, et cetera, et cetera. So in our case, we have actually really good ratios on level. Like people are holding positions for a long time on Ostium. We have really good volume to OI ratios. So it's that's kind of like one of the metrics that we look at like really really deeply to kind of like again get an example, an idea of the actual level of real activity, real trading, as opposed to just like farming activity and wash trading and things like that.
Yeah, super interesting. So volatility in crypto markets is a given, as we talked about, and I'm curious to if you could speak a little bit about how you navigate that volatility, especially when it leads to revenue. Like, are there certain strategies that you're more likely to deploy revenue-wise, like in more bullish times versus bearish times? I'm curious just like how that affects your business in different moments.
Yeah, so obviously volatility is both a blessing and the reason why we're here. I mean, it's both a risk and a blessing and the reason why we're here in crypto. So one thing that's very kind of beneficial for us, being kind of like this macro trading app that you can trade all these different assets, is so far, is volatility has been very good for us. Liberation Day, kind of beginning of the year, like around when tariffs and everything were just being put into place, the Iran-Israel kind of conflicts. So far, obviously, in a really bear market, this is going to change a little bit. But so far, it's like these volatile moments, like when risk pops up in the market and across asset classes, and people might want to again express their views in different assets. Like we've seen, those are our biggest spikes of activity. So we actually have to worry a little bit more about when there's no volatility, that people are less likely to trade. When there's high volatility, those are our peak like high moments in volumes and fees and new users and everything like that. So I think that the goal is to kind of just, we're very conservative. Like we have a very high margin business, is to make sure that we're healthy enough. We're not kind of just like spending crazy, like, is sometimes common in the space, so that when this time comes, like we have more than enough capital to survive through any bear market. And also just, yeah, I mean, if necessary, I really think that if you have a good DEX business, if you have a good exchange business, you will still see volumes like during the bear market. It might not be peak volumes, but you will still have activity. And so we're really just thinking that, again, that same way, even in the bear market, that the highly volatile moments, in this case maybe the bottoming moments, as opposed to the more topping and the markets going down moments, are going to be where we see the highest activity. So I think that financially we're in a very good place to deal with any bear market if activity does kind of crater from there. And then just in general, I think that high volume periods are good for us. So I think that we have a very sustainable kind of like revenue stream, and that because we're so conservative with our capital expenditure and even operating expenditure, like we're very lean. So I think that we are very well positioned to, if the bear market started today or tomorrow, we would be, you know, just giving the average length of bear markets, let's say that this bear market lasts like an average amount of time, like we would be perfectly fine. We would be thriving, next bull market. Like it wouldn't be an issue for us at this point. So
Yeah, no, that totally makes sense. I'm curious what advice you might give to teams that are other teams that are in DeFi that are trying to build sustainable revenue generating businesses based off of what you all have learned.
this is the most obvious, I think, maybe answers I've given you so far. But yeah, I mean, revenue is like the what like as if not the, it should be top three or like a absolutely core metric of your business. A lot of in crypto, a lot of people are looking at TVL, they're looking at just like raw user numbers or things like that. But like you need to make revenue like a goal. Like you have to be like, okay, like all of my operations like that I'm doing, like they have to lead to like a revenue. They have to lead to a level of profitability. You can't just be doing things and spending money on things that don't have like a payoff from a revenue perspective. So align your incentives all just around that, like align your incentives around activities that create revenue. So again, in our case, as an exchange, that's volumes. And then again, even more obvious, build something that people actually need. Like build something that people actually want to use, because if you have a product that people don't want to use, like that, it's the volumes, like I mean, we just talked about or mentioned, is that they're going to disappear during the bear market because
Yep.
people don't need to use it. So why are they going to use it when they're losing money or whatever else in other places? But if people need your product and you have a product that has product market fit, then they're still going to use it even if it's not kind of the peak of the market, right?
Yeah.
So yeah, the market cycles they come and go, obviously, but I mean, if you have real users, it's gonna push you through that. You're gonna survive off of your core loyal users who need your product, and that's gonna push you or get you through kind of the harder times. So
Yeah, I'd be curious to know what your take is. I have my own hypotheses, as I'm sure you would imagine, on the flip side of that, which is why do you think that DeFi founders get caught up in other things that aren't revenue? What explains that behavior in your mind?
um, I think because crypto is such a narrative driven thing that it's just like growth is looked at as kind of I mean, and this is true in all growth companies, to tech, everything like that. Just growth is looked at something that at all costs. Um, and I mean, the goal is obviously for any company, should be to get to revenue, but I think that people forget that and they're just like, at all costs, I need, this distribution. At all costs, I need to kind of like get these things that don't have a direct kind of, again, payout into like your revenues, so that they just kind of get lost like in the sauce a little bit, as to create growth that doesn't end up generating revenue. So it's like they're spending all this money, it's not turning into revenue, and then your business is either you're rushing to go raise again or something, or you're kind of just running down your runway until you're forced to kind of close down. Um, so I'm not sure if that is
Yeah,
fully
no,
answered the
no,
question.
it definitely answered my question. Yeah. I definitely agree with a lot of that as well. I think that there's all these sort of like side games in DeFi of like Binance listings and other things that people end up chasing something else that is irrelevant to their core
And one
business.
thing too is that community is super important, and obviously ethos of crypto, decentralization. You want to share the wealth with your community eventually. Like that's kind of like one of the key aspects as well. But there's got to be a limit. If you're actually trying to create a business, like a sustainable business, you can't give away all your revenue. Like you can't give away all of your incentives, or like you can't like just spend what it takes to generate revenue on generating that revenue. And this is unfortunately what you see a lot of crypto companies doing, is they're spending, let's say, 80%, up to 80% of the revenues to generate it. And then they have a very, very tight margin that eventually, again, it just the runway gets run down at that point, because they're unfortunately spending too much without an actual growth payout on it, an actual revenue payout on it. Because sometimes people get caught up too, because it's a narrative driven on just social metrics and things like that. But it's like social metrics do not always play into actual financial fundamental metrics. You can have great mind share, you can have great kind of like social distribution. People can be talking about you. That doesn't mean they're using your product.
I think that the industry is quickly waking up to that fact as well, which I'm thankful about. And
Definitely.
I think will be good for our industry. Curious, do you see either new business models emerging in crypto that excite you or ones that you might assume for Ostium. For example, like, right now you have a very straightforward, like, we take a fee off of volume, and that's very simple. But are there any things that you guys are thinking about for new revenue streams for you, or that in the market you think are interesting?
I mean, this is still kind of like really kind of like related to trading in a sense, but I think there's a lot of exciting things that are being built on top of prediction markets. So one of the things that we built that we're still working on a V2 that we had really, really good feedback on essentially was a way to interact with prediction markets and actually base other real world trades off of them. So for example, like the type of product I'm thinking of is there's kind of a couple ways to go with it, but the type of product we built was essentially you can use an event. So let's say I'll just use one that actually happened. It's easiest just as opposed to making something up. It was essentially around the Trump, just kind of the U.S. election, right? You had a lot of people, particularly who were in Europe, who were in Asia, who were like, look, I'm not staying up all night to kind of like figure out, who won the US election. Like this is, like, it's like I care, but like this isn't like even my country, like I'm going to go to bed, right?
Yeah.
For those people, the use case was, okay, if the odds of Trump winning go up to 85% plus, it's probably pretty solid that he's going to win. So you could have gone on Ostium, clicked into our trading strategies product is what it was called and what it is called. So we're working on strategies V2 now. And you could have been like, well, if the chances of Trump winning go up to 85% plus, I want to long Bitcoin on 50x leverage. So
Mm.
basically these prediction market wrappers, the ability to interact and kind of like place trades or kind of like take bets based off of the results of an event, I think is something that is really cool and that is again, when our V2 comes out, I can talk a little bit more on it, but like you'll notice that like the CME group, so like the Chicago Mercantile Exchange, they just partnered up with FanDuel to like release event-based contracts. So like event-based trading, event-based contracts, like event-based products. I think that's kind of like a future vertical for a lot of these people and for us as well. And I think it's going to be, I think it's
Very cool. Final question here from me is zooming out, what does success look like for Ostium in the years to come?
So success for us is being the number one place, again, to trade any asset. So not just crypto, not just indices, not just single stocks, not just bonds and yields, vol. Like we want to be the place where if you have capital in your crypto wallet, let's say you've been around here for a while, you don't like going off chain, for example, which is a lot of people in DeFi. You can essentially you can use those funds in your wallet, your stables, to go take a trade, go take a directional bet, hedge, whatever it might be, and without leaving that one platform. Like right now, there's friction. Like if you want to go trade at let's say commodities, you have to do it here. If you want to go trade stocks, you have to do it here. If you want to go trade crypto, you have to do it here. So there's a lot of transferring of funds. It adds more execution, like operational risk. So if you can just self-custody, have your own stables in your wallet, and you can just one interface, like one place, trade any asset. I mean, that's it right there. We want to be that hub for both, again, the end user and then also just for, institutions who same thing, they don't want to wait T+2, T+3 days for their funds to settle. They have kind of, basically, they have capital that they need to move around. They can't wait for settlement. Well, why not just, run your hedges, like run that strategy here on chain, run your long leg on Ostium, and basically, you're set. You don't have to move your funds on and off chain. So we want to be just number one most liquid place where both institutions and users can basically express these views, and essentially just eventually approach that. It's a $200 trillion or dollars of volume a year market. There's 80 million active users like in the actual like future CFD trading community, and crypto has captured like a small percentage of that. So I think that in the long term, what success looks like for us is escaping crypto to a degree, like escaping the on-chain space, getting into this much huger kind of market of traders and being a place where, again, not just crypto people, CT, but like these broad kind of like user base, millions of people out in the world, the people who are using Robinhood, they're using eToro, they're using kind of these really big platforms. They're looking at us as a competitor and an operator in their space, not just like, oh, we're a crypto competitor, right?
Yeah, no, it definitely makes sense. Really excited for the future for you. And thanks
Appreciate
again
it.
for being on the podcast.
Yeah. Thanks for inviting me. Great to be here. Appreciate all the questions. Give me a chance to kind of like, evangelize Ostium and yap a little bit. Always a good time.
Yeah, thanks again.